U.S. nuclear plant owners and operators purchased less uranium in 2022 than in 2021 and at a higher price. Higher price. Okay? Less uranium at a higher price. According to the EIA, latest annual uranium marketing report, most of the uranium delivered in 2022 was of a foreign origin, with Canada and Kazakhstan together providing more than half the time. What's up, Capital Cosmonauts? Welcome to Capital Cosm. We've got a very special episode today because we have a ton of uranium news to get to. We've got the weekly technical analysis as well as our machine learning model predictions. So with that said, let's go ahead and dive in straight to the charts here. But before we get started, nothing here is financial advice. I'm not a financial advisor, so please do your own due diligence. All right, so what are we looking at here? We're looking at the uranium spot price for the week. And for the first time in, 1, 2, 3, 4, 5, 6 weeks, we saw a move to the downside. Now, is this necessarily bearish? Well, let's take a look here. I've got this nice little resource we can look at. This is what's called a dark cloud cover, or is it? We'll see. It looks awfully similar to it, but we'll see if it fits the bill. Essentially, when we have this accumulation of green candlesticks crescendoing up like we do see here, a red candlestick as such typically is a bearish formation. It's a bearish signal. So it says here, a dark cloud cover pattern is a chart pattern that forms when a bullish candlestick is followed by a bearish one, which meets the following criteria. It opens with a gap higher and closes below the 50% retracement. This is considered a strong reversal pattern. A reversal in this case would be to the downside in our case. Now, does this satisfy the two criteria? Number one, it opens with a gap higher. Let's see. Well, it did. It opened all the way up here in $57.50 as opposed to $57. But did it close below the 50% retracement of the first bullish one? So it would have to fall beneath 50% of this green candlestick. Did that happen? The answer is no, but it did get somewhat close. So is this a sign of a bearish reversal? Not necessarily. Again, we didn't satisfy both criteria, but we did satisfy one criteria. So it's something to keep in mind. Momentum appears to be slowing in terms of the price action to the upside. But let's see what the miners have to say about this. And again, guys, this stuff doesn't go up forever. We're going to have to come back down, correct for a little bit, and resume our move up. Nothing moves in a straight line, all right? So don't get too discouraged. URNM on the weekly. Again, guys, this is beautiful. Boom, 1, 2, 3. And now, for the week, we opened strong. We went all the way up to the 36.29 level, and now we're currently resting literally on resistance. So next week is the moment of truth. We broke through the resistance line. Now we're back testing. Will we fail the back test? Let me know in the comments below. What do you think? URNJ. URNJ is, we've got a reverse hammer candlestick. Similar to what we had in URNM, actually. Forgot to point that out. So yeah, a reverse hammer candlestick. So what does this say about inverted hammer candlestick? So it says an inverted hammer candlestick is a single candlestick that forms when a security initially trades higher from the opening price, but later on the day trades lower to close the day. An important requirement is that the body of the candlestick has to be less than 50% of the wick. Okay, so this is the entire wick here, and it's got to fall below this point here. It can't be above it. Otherwise, it's not a hammer candlestick. Is that what we got here? Kind of hard to tell. I would say so. I would say we're just beneath that 50% marker. And it says less than 50% of the wick. This is supposed to be a bullish reversal. Statistics have shown that it is not, contrary to popular belief. An inverted hammer pattern has been proven to be a bearish candlestick more often than a bullish one. So this is looking at statistics, and it's saying whenever we see this pattern, we tend to see more downside than upside. It's an inverted reversal pattern. So is this signaling that we're essentially going to fail the back test? We're going to retrace all the way back down. Let me know what you guys think in the comments. And we see, it's kind of hard to see here where URNJ. It looks like it's literally on the 50% line. So really hard to tell, guys. I mean, we're back testing. Next week is going to be very telling in terms of where we're heading. All right, let's look at URNM divided by the uranium metals price. And again, we want this to go up. We want the miners to outperform the metal, because when the miners outperform the metal, it means that there's more confidence in the sector because more money is flowing into the speculative names. So where are we at? Well, this is good news. I mean, we actually finished significantly higher than last week. And is this a bullish engulfing? Let's see. Let's look at our little resource here. So a bullish engulfing is a chart pattern that forms when a candlestick fully engulfs the previous day candlestick. Obviously, this is not indicated that the move lower that preceded has a high chance of reversing since the bulls managed to take control. So we've actually got a bullish, somewhat of a bullish engulfing here, if you just look at the body of the candlestick. So that's good news. That's some upside pressure that we could, potentially move on up. Let's look at URNJ divided by URNM. So the juniors divided by the bigger cap miners in this case. And where are we at? So last week we had a hammer candlestick. This week we had a reverse hammer candlestick. So, it does seem like it's a sign that URNM is about to outperform URNJ, which is not what we want to see. We want to see the more speculative names gain more momentum over the bigger cap names. So far, it's looking like uranium momentum is beginning to slow down. We'll see what next week takes us. All right, so this is uranium divided by gold, and again, we see this dark cloud pattern that we alluded to. Not quite, guys. We're not below the 50% retracement yet, but it's not. Our move up has been kind of slowed down. So I would say this is, we're seeing some neutral moves in uranium this week. Not really expecting a big move to the upside, but we could see some downside correction, profit taking, etc. Uranium versus oil. So where are we at? So long term, broken out of this resistance line, but we do have a reverse hammer candlestick. So is oil about to begin outperforming uranium? So all signs seem to be pointing towards a slowdown in uranium. Let's look at CCJ. Where's CCJ at? Boom. CCJ has been breaking out of its resistance line, but this week, reverse hammer candlestick again for CCJ, just like the other vehicles that we just looked at. So we might be coming back down to back test. And again, what is this weird little blue line, series of blue lines here? Well, this is a fractal pattern of the patterns that we saw. So this is essentially this pattern move up, copied and pasted and juxtaposed up. And essentially what it's telling us, if it does retrace the same pattern, now, there is a lot of, there is some similarity here, but not quite. It's not 100% correlation. But if we follow a similar route, we expect to see a little bit of downside movement, and then before we break out in the fall of 2023, so this year. And this could go all the way up quite a bit. This is ridiculous. If it follows that same trajectory, You're looking at $300 CCJ versus 31. So a 10x, a 10 bagger in CCJ. All right. So that's what I got for the technical analysis side. Let's look at Sprott, Physical Uranium Trust. Where are we at for the week? Okay, so now we're down to a minus 4.56% discount to NAV. Let's look at the chart here. Where is it at? All right, so the yellow line is the actual net asset value. If you evaluate all the uranium owned by Sprott, the green line is the actual price of all that uranium that's selling for. So, we're beneath that yellow line. Anytime it's beneath that yellow line, you're essentially buying Sprott all that uranium at a discount. In this case, it's a minus 4.56% discount. So we're beginning to close that gap. You can see that here. This is the premium to discount ratio. We need to get above the 0 marker here. Okay? So when we get above 0, that's when Sprott starts buying uranium off the spot market, and that's when we can really start seeing some movement, some pretty significant movement in the price action of the Sprott market. And why is that relevant? Well, here, we've gone through this multiple times, but it bears repeating, and that's because, if I can find it, where is it at? So when Sprott really started buying pounds of uranium in this area here, that's when we started to see the uranium price really start to shoot up. Here. Where is it at? Here. So this price action from here to here, that's when Sprott started buying. Okay? From fall of 2021 or late summer 2021 to spring of 2022. All right? So Sprott has been the catalyst of the prior legs of movement higher in the uranium price. So we'll see if once we get above 0 again, if that will be that'll be a catalyst again. So, all right, sentiment, uranium stocks over time. We have been moving up in sentiment. If the huge spike in uranium, the mania in September 2021 was 100. Then we're currently sitting at an index of 14. So we're move this down a bit, 14% of the big hype around September 2021. So it's still got a long ways to go, even though we've moved up quite a bit. Sentiment is still pretty low. Now, how does this compare to sentiment as it relates to something like silver stocks? I just want to highlight how small this market is, guys. It doesn't have nearly as much interest as some of these other commodities. So silver, this huge silver spike, this is a big silver squeeze of 2021. If uranium, the uranium stock searches that we're seeing, it's only 1% of that silver squeeze sentiment. Even the big spike in September 2021, that was only a tenth of that same level of interest. Okay? What about gold stocks? So let's compare uranium sentiment versus gold sentiment. This is what we see. Again, it's nothing. Uranium's here in blue, gold stocks are here in red, and again, these huge spikes that we saw in, September 2021, sentiment was only 22% of the peak in gold in early 2020. And we've always been beneath gold. So we still got a ton of people that are just unaware of this uranium trade. We can kind of embellish ourselves on uranium Twitter and all these things, but we're still a small group of people. And then finally, let's look at oil stocks compared to uranium stocks. Okay, uranium stocks don't even come up on the map. Guys, it's no competition. Even our big spike here, I can't even see it actually. It's like the big spike we saw in September 2021 doesn't even register here compared to the interest in oil stocks that was had in early 2020. That was when oil went negative. Okay? So when this stuff really starts getting mainstream attention, we've only scratched the surface of the surface. It's explosive. Hate using that term, but that's what it is. All right, now let's look at our URNM Fear and Greed Index. We've got the URNM price over time here in blue, and then we've got our Fear and Greed Index here in red. Now, we had a rapid rise up in our URNM share price, and as a result, that's prompted the Fear and Greed Index to go all the way up to 100% greed. Now, anytime we reach these levels, we tend to have a correction back down. There have been exceptions, however, the one being in late 2020 all the way up to mid-2021. We were in pretty much greed territory for the duration of that time, although we did see some corrections down, but not that much. But that was pretty much the only exception, as you can tell here. Now, does this mean we're a little overstretched? We moved up a little too quick, a little too much as it relates to the miners? Well, everything we've looked at so far in our analysis seems to point at that uranium is at a pivotal point right now. There's a good chance we might correct back down. A lot of indicators are showing it. The Fear and Greed Index being one. We've looked at the candlesticks on the technical analysis. There's a lot of bearish, neutral to bearish signals that we're seeing across the different vehicles. So I'd keep my eyes peeled here. Let's look at the machine learning model. And we've got our Sprott price here in blue. We've got the predicted price, the fair value price, determined by the model here in red. And where are we at? So we're currently at, the blue line here is slightly above the red line, which means that we're still fairly valued, but the Sprott price is a teeny weeny bit overvalued now. We were all the way down here in undervalued territory. Now we are a little bit overvalued. So we're getting signals again that we may be a little stretched too thin. Now, if this is the real deal, this is the next leg up in the uranium price, all this stuff should just kind of fall to the wayside. There's no real strong signals that we're going to come back down. But if this was a normal period, I guess, in this uranium cycle, I would say likelihood is that we're going down for a bit. We're going to correct, see some profit taking. But if this is the real deal, when it comes to the next leg up, then I don't think this is enough to really stop us from shooting on up. USA plans continue to rely on foreign sources of uranium supply. So this chart looks at uranium, United States uranium purchases by foreign suppliers. And it's in thousands of pounds of U3O8, all right? So the biggest supplier, and we've also got it stratified by year. So we've got 2018 in blue, we've got 2019, let me make this a little bigger for y'all. All right, so we've got 2018 in blue, 2019 here in orange, 2020 in green, 2021 in yellow, and then red is 2022, all right? So Kazakhstan was a big supplier of for the US in 2021. But as you can see across all these countries, US purchases of uranium were down pretty much across the board except for Canada. Canada actually went up in 2022. But Kazakhstan saw a significant decline from just over 16,000 or 1,000, so 16 million pounds of uranium bought from the US down to just under 10 million. But we also see an increase in Uzbekistan, but here is what it's saying. U.S. nuclear plant owners and operators purchased less uranium in 2022 than in 2021 and at a higher price. Higher price. Okay? Less uranium at a higher price. According to the EIA, latest annual uranium marketing report, most of the uranium delivered in 2022 was of a foreign origin, with Canada and Kazakhstan together providing more than half the total. All right. What about Russia? There's a lot of talk about banning Russian uranium, U3O8 purchases. Well, that would be about 5 million pounds off the off of the market as it relates to the United States. So it says here the 40.5 million pounds of U-308 total uranium purchased by the owners and operators of the U.S. civilian nuclear power reactor in 2022 was 13% down on 2021's total of 46.7. The weighted average price of $39.08 per pound for 2022 was 15% higher than 2021's weighted average price of $33.91. And the highest since 2016. Now it's gone well above that in 2023. Most of 2022 uranium deliveries were of foreign origin, with Canada the top source at 27% of total deliveries, followed by Kazakhstan 25%, Uzbekistan 11%, and Australia 9%. U.S. origin material accounted for 5% of the total. So only 5% of the uranium purchased by the United States was actually from the United States. Some 15% of the uranium delivered was purchased under spot contracts at a weighted average price of $40.70, with the rest long-term contracts at a weighted average price of $38.81. So the ball is in motion. The game is changing, you guys. This is 2022. Just wait till what 2023 brings. I mean, we've still got the fall of 2023, which is when uranium season really starts to pick up. It's in that autumn to spring time period. All right, well, let's jump into something else. I think that covers pretty much the gist of it. This is an article from the WyomingPublicMedia.org. As nuclear power gains steam, uranium mining and its impacts may grow in the Mountain West. Well, there you go. The United States is buying more uranium, or less uranium, and less of it is coming from its own borders. So we're going to start seeing more of an effort to get this stuff from the United States, from our, from our own soil. So pretty much what we're covering here, this kind of looks at the U.S. Production of uranium since from 1950 to 2017. You can really see how it's really kind of tapered off here. I mean, this is pretty telling. And yeah, I mean, essentially, we're going to start seeing more uranium production coming out of domestic sources here in the United States. So stuff is inescapable. Let's head on over to Twitter. This is a chart looking at terawatt hours generated by Denmark, Portugal, and the UAE. And we're segmenting it across wind and solar for Denmark in blue, wind and solar in Portugal in red, and then the UAE in terms of its nuclear energy generation. So the UAE was nil all the way up until 2019. We saw some build out in nuclear energy in 2020, and then boom, it's just skyrocketed. All this time that it took to onboard all this wind and solar for Denmark and Portugal, the UAE was able to catch up to that within the span of a couple years. So I kind of talk about this on my Twitter. If you don't follow me on Twitter, you should. It's at Capital Cosm. Link in the description below. But we're essentially seeing, I mean, this idea that nuclear power takes so long to onboard is a myth, guys. This is purely an artifact of excessive bureaucratic red tape. And I had Doomerg on about a month ago, and he talked about that as well. If you haven't seen that interview, I highly suggest you watch it because it also debunks a lot of the myths surrounding nuclear energy. So this is a chart on Japanese sentiment on restarting nuclear power plants. Now, most have been in the opposed column for quite some time after the events of Fukushima. This red line here is your opposed. This blue line here is the amount of people that are supporting nuclear power. And for the first time since Fukushima, we've got the majority of respondents in Japan supporting nuclear energy. Now, Japan going offline with nuclear, or not offline, but significantly down. Downplaying their purchase, not downplaying, but significantly reducing their uranium purchases was one of the catalysts that brought down the last uranium bull market as a result of Fukushima. But now, for the first time, sentiment has switched over to the other side. So, looking good, guys. So that's what I got for you today. If you enjoyed this content, be sure to subscribe to the channel, hit the like button, do all the YouTube stuff I'm supposed to tell you to do. I'd really appreciate it. Buy me a coffee as well. You know, anything helps. All right. So with that said, guys, I'll see you in the next video. Out.